Thank you, Neha. Thank you for inviting me on your show to share my market views with you and with all the viewers of ET Markets.
Well, the pleasure is all mine. So let's quickly start our session for today. Let's start with what's really happening in the markets right now. We did see the markets fall as much as over 2,700 points when we talk about Sensex in yesterday's session. And then we did see some kind of recovery today in today's session as well. So, what are the core drivers of the stock market volatility right now? Is it all about macroeconomic, geopolitical, structural, or a mix of everything?
Yeah, Neha, just to be precise, okay, all the factors by and large, it can be geopolitical and the tariff war, which is completely unwarranted. And the problem with these tariffs are nobody is going to gain with these tariffs. Okay, that's the problem. That's the reason there was a humongous panic across the globe. Okay, there was no single market which was escaped this ferocity of fall in the last few days. So India is not an exception. Okay, because of these geopolitical and also the tariff wars are concerned. Okay, all the equity markets across the globe they got corrected. But uh, given the kind of the ferocity of the fall, India is relatively better off when compared to the other nations. Yesterday, we witnessed markets like Korea and Japan hitting the lower circuit, whereas we can see some kind of a rebound. The good part of our markets were Nifty could able to trade, could able to maintain the and sustain the level of 22,000 level, which given us some
Mm,
kind of a positive rebound to the market. Coming back today, after the slide and a strong sell-off across the globe, we can see some kind of a rebound despite of the
yeah.
still the tariff worries are on. Okay, there is no taking back step in terms of these tariffs are concerned, but markets have reacted uh, very strongly because of these worries. Right now, we can see a slew of positivity in the markets in terms of the buying is concerned. Some kind of bottom fishing is taking place across the globe. It can
Mm,
be except a market like Indonesia, where the market is open today only after the Eid holidays for them, Ramadan holidays
mm,
for them, and that is the only market in Asia which is down around 8% today. It was down in the morning at 9%, but some kind of recovery there also we are seeing strong rebound in Europe also we are witnessing at this point of time. So after the
mm.
sell-off, you can see some kind of a relief rally. I can say this rally, global relief rally, what we are witnessing at this point of time. If you ask me, is the worst is behind us? No, we still the worries are on. We need to closely monitor and track next couple of weeks how things are going to settle down, how this tariff dust is going to settle down. We need to see.
All right. So let's also talk about the market sentiment right now. What is the market sentiment telling us? Are we in a fear-driven or opportunity-driven phase?
Absolutely, at this point of time, it's a fear driven. Okay, the opportunities still we need to see those kind of deep drive opportunities in this market still
Mm,
act to manifest because majority of the large cap or mid cap stocks are concerned. Even though we have witnessed a shake off of the stock prices, but those mouth watering levels are still yet to come, Neha. So
yeah.
right now it's a global panic at this point of time, but valuations still I don't say they are deep value or deep discounts are available. I don't think so. The quality ones are still at their fair valuation zone.
Mm, okay. All right. Let's also talk about how global factors are affecting Indian markets. Global factors like US trade policies, Donald Trump's decisions, and Asian market movements. How are these factors impacting Indian equities right now?
Absolutely, they have a complete dominance at this point of time. The global factors are the key driving factors at this point of time. We need to keenly watch the global cues. There is no escape in the medium to short term is concerned, because everybody are sailing in the same boat. Okay, by and large, the tariff percentages are different. Okay,
mm,
but in terms of the global flows, global cues are concerned, we are completely linked to these global cues. There is no escape in terms of the global cues and the medium to short term sentiment is concerned. But by and
okay.
large, India have I can't say it's a complete a safe zone, but we are in a
Mm.
better off when compared to any other emerging market nations across the globe.
All right. Just a follow-up question. You said that Indian markets are linked to global trends right now quite tightly. Uh, what point can we expect to maybe de-link where we can see the Indian market de-linking from the global trends? Anything bigger in India that could affect or maybe decouple the Indian market from the global trends in the coming months, maybe?
Neha, I have been watching for this the decoupling theory from past 25 years. Uh, Whenever sometimes we tend to say India is the nation decoupled, but the decoupling theory, it is by and large a short-term kind of phenomena.
Mm,
Uh, but
mm,
for that, the decoupling theory, one thing is two factors should play. One is, okay, the earnings, okay, that should be a strong driver, and the valuations. Okay, these are the two
mm,
drivers which will insulate the Indian market in terms of the flows are concerned.
mm,
I will devise your question in two parts. In terms of the businesses are concerned, given the kind of trade deficit of 45 billion dollars, what Indian economy has with US, by and large that can be managed. Okay, but there are portion of software exports, what kind of impact that's going to have, and software
mm,
exports also a kind of a essential service for US economy is concerned. So ultimately, whatever be these tariffs are imposed by President Trump, it's a kind of a tax he's imposing on the US citizens. Ultimately, these tariffs are have to bear by the US citizens has to pay these tariffs. But it's going to create kind of a demand impact on the economy and how the margins, and also definitely it's going to create the impact on the demand for those services. But by and large, if the demand is inelastic, if there is a price increase also, yeah, if the consumer has to pay, just like a pharmaceutical one, whatever be the price, we have to pay the price and consume that medicine,
mm,
if there is no option. But it's going to create a havoc on the consumption story with respect to the US consumption is. Just to add to your point, just to give the number why so much everybody the world is worried about the current tariff. The reason is
mm,
the size of the US consumption is comes to around 12 to 13 trillion dollars. So US consumer is a dominant player. What they consume is around 40 to 50% of the entire European consumption. So that is the reason the US consumer is a dominant consumer. So with
mm,
respect to the Indian trade is concerned, by and large we are better off in terms of the businesses are concerned, in terms of the trading lines are concerned. Coming
mm,
to the equity markets, capital market flows are concerned, uh, we have witnessed we have we have witnessed exodus of funds that are going out of India, but we could be able
yeah.
to sustain. But in terms of the global sentiment is concerned, if the global
Mm,
sentiment becomes negative, there is no isolation for India also. So that we witnessed in 2008, we witnessed
yeah.
in during COVID time.
2020.
Yeah,
Yeah.
so in terms of the capital flows, okay, we can't say we are uh, decoupled, but rather than we are recoupled in terms of the capital flows and the short term
Mm.
sentiment is concerned.
All right. So you also mentioned earlier about valuations. Let's also talk about valuations. Do you think that valuations for Indian high quality stocks are stretched right now, or have the recent corrections, brought them closer to the fair value, or what's happening when it comes to the valuations?
Neha, with respect to the large cap, the Nifty 50 companies are concerned, Sensex 30
Mm,
companies are concerned, the indices stocks, the heavyweights. Uh, right now, we need to see how much the global geopolitical issues and the trade
mm,
tariffs are going to have impact on their earnings. That's what we need to see. And also, we can see some kind of a compression with respect to the margins are concerned in the medium to short term. So Q4 we need to keenly observe what kind of margins we are sustaining, what kind of earnings outlook these companies are giving.
mm,
This is extremely crucial for the markets to see. So
mm,
Q4 earnings, and if there are no negative surprises, and also if the earnings outlook is uh, good, so market could able to sustain. Everybody crosses their fingers just to observe the guidance from the companies for the Q4. Traditionally, by and
mm,
large, Q4 can be good, but what the management commentary markets, one hand, they look at the earnings and also the growth of the earnings that are the
mm,
forward looking. So that's where market is concerned at this point of time. Uh, how is then we can say, okay, Indian companies are out of this global route that's taking place at this point of time. So by and large, Q4 earnings are extremely crucial, and also we maintained a tight monetary policy. We had a early rate cut for 25 basis points. If RBI stands and commentary also, there is a consensus view at this point of time.
mm.
25 basis points is a done deal at this point of time. That's what the consensus view at this point of
Yeah.
time. So RBI guidance and the credit growth, and also the joker in the pack for Indian economy is going ahead, the monsoon. How that's going to
Mm.
turn about, the rain gods also involved in this market play. So these are the factors that are going to drive. Apart from that, daily tweets of Trump that do hammers the market here and there, changes the market sentiment in the medium to short term.
All right. So, in your opinion, do you think the current rally in the markets is sustainable or it's just a short-term reaction?
One thing is, technically speaking, market could able to see a strong rebound yesterday at the 22,000 level. By and large, I'm in the opinion markets are not going to run away from this range at any point of
Mm,
time. So by and large,
mm,
there would be some kind of consolidation for some more time till the time we get that earning season clarity. Otherwise,
mm,
markets can be in a range bound between the 22,000 to, on the higher note, the previous high of around 23,500. This is the range we are looking at the immediate resistance and support zones. But on a downside, if the market breaks anything below 22,000 level, that can create
mm.
some kind of fear in the medium to short term in the market. So this is the range for the Nifty in the medium to short term.
All right. Let's also talk about investors since you mentioned about fear. So there's a lot of fear for a lot of new investors in the market. So as a person who spent a lot of time in the markets, what should you think retail investors should do right now, and how should they approach these volatile times?
One thing, Neha, one need to check. Everybody is an investor, okay, but what kind of stocks, okay, they're holding? Whether they're holding a growth stock, or they're holding a value stock, or they're holding a momentum stock. The main reason, the where the cause of worry that creates in the market is investors tend to uh, fill their portfolio with a bunch of momentum stocks, and these momentum stocks tend to create so much volatility in the portfolio. So
Mm,
when why the stocks tend to say categorized as a momentum stock? Everybody likes the momentum in the market. Everybody wants some kind of a quick moves in these markets, and these momentum
mm,
stocks have a high PE ratio. And whenever there these kind of global rot or any kind of a knee-jerk reactions that took place in the market, the first
mm,
stocks to get punished are the momentum ones. So if the investor or if the investor have a deep value stock, growth stocks, nothing to worry. Okay, these are the stocks which witnessed a phenomenal market cycles. Okay, which have a
mm.
strong earning record, track record, and a strong management quality. So that is the responsibility of the management to weather these kind of market cycles and the market headwinds. That's the management dynamics that they will take care. If I have any stock, and if I'm pretty much confident the management have the capabilities to execute their plans in these
Mm.
kind of turbulent times, I need not have to worry. I can just go and jump those stocks, jump and buy those stocks in this kind of volatile. So one need to have a thorough check. If I
Okay.
am holding by any chance a momentum stock, strict stop loss has to be maintained, because I don't know where the bottom for this momentum ones.
All right.
So
Let's also, yeah, yeah, please.
so the retail investor have to check their portfolio
Mm,
before taking any kind of decision. Sometimes some investors tend to say the momentum stock can be keep on coming down, or the quality less stocks keep on coming down, and they
mm.
take the theory of averaging for the bad ones. Okay, just like accumulating the garbage in their portfolio, and it will not yield anywhere. So one need to check their individual portfolio.
Okay. And when we talk about portfolios, let's also talk about different sectors right now. So we are aware that a few sectors, primarily if we talk about auto and pharma, these sectors are getting affected more due to Trump's tariffs and all the announcements related to tariffs. Which sectors do you think could be in focus for some time, whether we talk about in a positive manner or a negative manner?
Neha, on a lighter note, earlier when we were meeting the markets, and
Mm,
even the investor have a tendency, if the company have an export pie to US, people get used to get excited. Now
mm,
the scenario is completely changed. If they have an exposure to US, that is a stock to avoid in the medium to short term. Now we are looking
right.
for the domestic growth drivers, the domestic centric companies like the FMCGs, and the domestic infrastructure focused companies, and the railways, are some extent the defense, which are by and large unaffected by any kind of these global trade war kind of a situation, are the companies which don't have any kind of a US exposure, a company which have a strong exposure towards the Middle East or different geographies. So by and large, at this point of time, okay, are like oil marketing companies. Crude prices have came down, their margins can go up in the medium to short term. So these are the ideas one can take it forward. Or a company which have a strong moat despite of these trade wars and all, tariffs and all, which can sustain their earnings. Those kind of models one need to look. By and large, the domestic infra and healthcare. If the in this correction, if the
Mm,
healthcare stocks comes down, they are completely insulated from these kind of tariffs are concerned. In fact, if they are importing any kind of equipment from US, okay, they get benefited by and large in these
mm.
tariffs are concerned. So by and large, one can look forward the domestic centers and the stocks by and large give importance to large cap stocks. If the investor understand more about the company in mid and small cap space, one can take those stocks into their portfolio.
All right. So before we close our session for today, one last thing I would like to ask you is that is this market correction, which we saw yesterday and whatever is happening in the market, is a healthy reset or a sign of a deeper economic trouble?
I don't call it as a deeper economic trouble in terms of the Indian markets are concerned. Okay, it is
Hmm.
a unprecedented one, and nobody anticipated this. The tariffs were there. The news has been there from the past 45 days, but the way unilaterally the Trump administration have moved these tariffs overnight dampen the sentiment of the global markets across the globe. Uh, the I can say this is just like a breach of trust between the countries. Okay, that kind of a ferocity of negativity these tariffs have created. That is the reason we could able to see such a kind of a corrections, deeper corrections across the globe. Of course, India we have not witnessed such a we witnessed a knee-jerk kind of reaction, but
Hmm.
there are many markets which have witnessed a deeper cuts in the recent couple of days time. But Neha, it is premature to say the worst is behind at this point of time. We need to wait and watch how things are going to pan out in the next couple of weeks, because these are the unprecedented ones.
Hmm.
And of course, if we are there in the equity markets, we need to try to habituate this volatility and embrace these kind of unusual times.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking our time and joining us today on ET Markets live stream.